Hello, Theo traders. Gianni DePocha here with you. Today is the 16th of July, 2024, and I want to review a few charts, starting off with the Dow Jones Industrial Average, because we're seeing some really important price action here in this index. We finally broke out to new all-time highs over the last couple of days, and today it's really begun to accelerate. And in the TheoTrade chat room and other segments of my analysis, I've been discussing the presence of this ascending triangle formation, which is a continuation pattern. And now that we're breaking out above resistance of this pattern, it does appear that a continuation of the bull trend is unfolding. And so in terms of price targets, we're looking at the Dow potentially rallying as high as 43 to 44,000. That is a good sign, and I fully expect prices to rally up into that area. And it's not just the Dow that has started to break out. We've also seen the Russell 2000. Take a look at the futures here. For the Russell, we finally broke out above multi-year resistance, and two strong weekly candlesticks. Well, one is already complete. The second one is already in the making, on their way up, and it looks like we could see the Russell go on to retest its all-time high. And this is being buoyed, this sector, by biotechnology, which is something that I've been pounding the table on over the last couple of weeks. Take a look at BTK, the New York Stock Exchange Biotech Index. This monthly chart really does get me excited because I think it still is very early in this sector's breakout and has the potential to really push the Russell 2000 higher. And even the Dow. I had remarked before how two of the stronger stocks in the Dow included Amgen and Merck. Merck not as strong. You're seeing some selling today, but Amgen especially really picks my interest because it's a big biotech slash healthcare stock, and even the healthcare sector, hitting new all-time highs. This is the second largest sector in the S&P 500, and seeing this start to participate and hit new all-time highs is exactly what we needed to see, given the price action that we are observing in the NASDAQ, which is down slightly on the day as of this recording. Wouldn't be surprised if it flipped to green and we got a slightly positive close. The NASDAQ's been leading, tech's been leading, chips have been leading. Take a look at the Philadelphia Semiconductor Index. It did just turn positive on the day. I'm definitely not bearish tech right now. In fact, I would like to see it embark on a period of extended consolidation, digest the gains, build a new base, reset momentum, kind of shake some of that excessive bullish sentiment out of the picture, and basically set us up for another leg higher. But my one concern that I'm having now, if you take a look at the S&P, it's up about 0.5%, almost there at a new all-time high. But one of the things that I'm paying attention to that is a little bit more of a risk-off signal is now that we're seeing the Dow break out and make new all-time highs, the NASDAQ not, it does raise a yellow flag, not a red flag, a yellow flag. It's not uncommon to see the NASDAQ peak first. The NASDAQ leads both to the upside and to the downside. In fact, the NASDAQ just turned positive here now. So if we are going to see a high of significance form this late summer, early fall, we may have seen the high in the NASDAQ. That is not my preferred scenario. That is not my bias. I'd like to see new highs in the coming weeks, but I fully expect the NASDAQ to form a new all-time high, and I fully expect it to peak before the Dow. In other words, once the NASDAQ peaks, I actually want to see the Dow make a high afterwards, because that's representative of a flight to safety trade. The Dow is comprised of more conservative blue chip stocks compared to the NASDAQ, and staying true with the principle of capital flows and intermarket analysis, risk on, risk off, we usually see capital seek refuge in the more defensive or safer areas of the market before rolling over. It's not like we just wake up one day and the market crashes and nobody anywhere ever saw anything coming. That's not how markets work. It's like when you're turning in your car, you pump the brakes before you turn. Markets do the same thing. There is a slowdown in upside momentum seen by capital flows not seeking the most aggressive risk on segments in the market, and we're still seeing good signs. So it's not all doom and gloom. All I'm trying to say here is that we're seeing some initial signs that the easy money has been made in this market, and you can also point that out when it comes to what's happening in bonds. So take a look at the dollar against the Japanese yen and even the euro against the dollar. Well, the dollar has lost some ground against the euro, but earlier today we did see the dollar up with bonds. Take a look at bonds. You're seeing duration lead to the upside today. So what was happening is you were seeing global capital buy dollars to buy bonds and buy stocks too. And this flight to safety happens at a global level as well because all markets across the world are connected. So we're seeing money pour into the US, buying stocks mainly, some bond buying taking place. Now we have a 95% plus probability of the Fed cutting rates in September. So wouldn't be surprised to see bonds continue their corrective rally here. But this is going to lead to a realignment of what sectors are outperforming. So I still think tech can do well, but we need to be aware of other opportunities out there, and that's why I've been pounding the table on biotech, especially. But it falls under the broader umbrella of healthcare. And as you can see, XBI and IBB are both doing well. Some of our top biotech picks, Nurix Therapeutics doing well. Mirum Pharmaceuticals, you can see exploding out of that base there, and even a name like Neurocrine Biosciences showing some life. Twist Biosciences really starting to accelerate out of its space as well. So these were setups that we discussed in the chat room a few weeks ago. They're taking hold, and it's playing out according to plan. Let's take a look at precious metals. Gold rallying to a new all-time high today. I mentioned before that there are two really strong bull trends in this market right now. The first one is in stocks, and the second one is in precious metals. And I think we could see a reinforcement of the bull trend, the longer term bull trend in crypto shortly. I will discuss that in just a moment, but you can see that gold's up nicely today. I do have a target in the $2,650, $2,700 area. Silver also catching a nice bid. If you take a look at gold and silver mining ETFs, they're looking strong. The Philadelphia Semiconductor Index, nice bid. We're really close to parking the truck, so to speak, on one of our back up the truck trades that we initiated back in February. Got aggressively long. Anglo Gold Ashanti have a target of 31. Probably will go higher than that, but a lot of the names that we've covered in the precious metal space still looking strong. Wheat and precious metals up a solid 4% plus today. Pan American Silver as well, so it's looking strong on that front. Let's go ahead and jump over to the cryptocurrency space. We came out of the weekend with a big bid, gap and run higher in both Bitcoin and Ethereum. It was definitely an eventful week last week. We had the lower than expected inflation report, all but locking in the rate cuts for September, a failed assassination attempt on Donald Trump. So the global chess pieces are moving and things are looking really interesting, no doubt about it. And if we can just take out those highs in Bitcoin and Ethereum from earlier this year, look for them to accelerate to the upside. And we're already starting to see this take hold on some of the crypto related names. MicroStrategy, Hut 8 has been a really strong name for traders here at TheoTrade. And of course, Mara Digital Holdings, that's one that we picked up on Friday, and the timing couldn't have been better because it really has started to accelerate to the upside since then. Another really strong stock that we got on the books is Jumia Technologies, known as the Amazon of Africa. If you compare that to Amazon right now, it's actually looking a lot better. And really the whole pantheon of Magnificent Seven names really just paused in their rally today. I'm not going to go as far as to say as we topped out, but NVIDIA mentioned that I wanted to see it consolidate. That's exactly what we're seeing right now. Take a look at Microsoft, a little bit of selling. Meta might actually get stopped out of that trade, but timing was off, so I'm totally okay with that. But one of the other things that I was looking at just recently, even though crude oil is showing some signs of weakness, technically not really a clean trend, is some of the opportunities in the energy sector space. So you take a look at XLE or XOP, two notable energy ETFs, and it seems like they're trying to come out of some important bases. And I don't really have any holdings in the energy space yet, but I've thought about changing that up. You can see some of the names that we've tracked recently, like Liberty Energy, trying to make a comeback after completing a higher low. Antero Resources, still a little weak, but I am definitely interested in what's happening in diamond offshore drilling and even Oceaneering International. Don't have any official trades on those yet, but it's definitely something on the radar, something I'm keeping close written on the notepad by my desk here, because I do think that we could see a sector rotation continue. And generally speaking, when you get into later stages of the equity market cycle, sectors like energy outperform. But the fact that we're still seeing, last week, the strongest performing sector was real estate, REITs, okay, off the back of anticipated rate cuts. I'm not really as optimistic on energy here because if the Fed's going to cut rates, it means the economy is going to slow. So we need to walk a fine line here and not get overly aggressive. But seeing some initial signs that this rally is maturing. The good news is that the participation is broadening. The public is starting to warm up to the prospect of higher stock prices. But I'm saying now, as someone who's been bullish for the last several months, not so fast. We're probably closer to the end now than the beginning. And that doesn't mean that we go short. It just means that when our targets are reached on our trades, we capture them, continue to manage risk, just like any other environment. Just because stocks are in a bull market doesn't mean we stop managing risk. We always have to be raising our stop losses. We always have to be minding our position sizes, even on trades that are doing well. We don't want to be too concentrated on any given position. So that's all that I wanted to discuss with you today. Thank you so much for watching, and I hope to see you in the TheoTrade chat room.